from all over the country. And while I'm not a realtor, I'm a mortgage professional. I've done my best research I can on kind of just making sure that all of my thoughts about how to help you guys win the deal are within the realm of what's appropriate in your market. But I do realize that there are some interesting states with some interesting laws. And so I just want to say up front, I'm not an expert in all of those, and I'm going to do the best I can to avoid any sort of those types of things as we go forward. But this is something that obviously is affecting everybody right now in this market. No one was interested a couple of years ago in the win the deal in a multiple offer situation presentation. So it's topical right now. And what I'm going to do is walk you through really some of the things that I think the mortgage companies can do, obviously, to help out and make a difference for you. Some things that are not mortgage related, and also just tie in the psychology of the sale. And so, but again, what Courtney said is really important to me, which is I do not like to hear myself talk just on and on for the next 30 or 40 minutes. Your interruptions are welcomed, questions, comments, anything that you can add to share. Certainly that would be you'd be doing me a favor. So I appreciate that. All right, so we'll start sharing. And again, thank you for everybody for taking the time out. I know how busy everybody is. Give me 1 second. I'm going to share and then extend my screen so I can still see everybody. Awesome. Thank you. All right. So winning the deal, how to win in a multiple offer situation. I'm hearing these stories. I'm sure you guys have your own stories you're going through right now. Houses where there's 5 offers, 10 offers, 20 offers in the first day on some of these houses. And some of the stuff that we're going to go over today probably seems pretty obvious, but what I'm hearing from a lot of my friends who are sellers realtors is that most people are not doing this stuff, right? And we tend to really underestimate, as human beings, not as realtors or mortgage professionals, just as human beings, the emotional part of our sale process and the emotional part of buying and selling something. In fact, I would wager to bet that if I ask people, what's the most important thing in somebody accepting an offer, they would say it's the highest amount of the offer or the least amount of contingencies or the pre-approval. But honestly, it's an emotional decision based on the entire package. And the people involved in the transaction are the difference most of the time. Who that seller's realtor is, who that buyer's realtor is, the loan officer involved, the attorneys involved, and the actual personality of the buyers and sellers come into play more often than we would all think. Right? The statistics behind this are very conclusive. People don't always go with the best offer. In fact, generally, we see about 15% of people always go with the best offer for something or the best price. 5% of people actually go with the most expensive thing when they're making buying decisions. They feel like that's how they're getting the most value. And then 80% of people in the middle are somewhere in between. And so we're going to go through how to win a deal beyond just the basic offer the most money, right? So understanding the psychology of the seller. People make decisions based on pain and pleasure. So oftentimes when you're selling a house, raise your hand if you think, for the people I can see here, raise your hand if you think that the pain or the fear of pain is the biggest thing a seller's thinking about when selling their home, or is it the pleasure of the experience of selling their home for the most amount of money and they're excited about selling? Raise your hand if you think pain is the greatest motivator for sellers or avoidance of pain. All right, great. Raise your hand if you think it's pleasure and the pleasure of getting the most amount of money and what they're going to do with it that does that. Interesting. My personal experience and what the research would show is that avoidance of pain or fear is actually the greatest motivator. And we're going to play on both of those, but it is especially, and by the way, the same thing for the realtors that we survey on this is that it is the avoidance of pain. So what are realtors looking for? Yes, they want to get their clients the best deal, but more importantly, they want to make sure that deal is going to go through. They want to make sure it's not going to get turned down. They want to make sure it's not going to be a panic situation at the last minute. They want to make sure that somebody's moving truck isn't going to get stuck with the stuff and they can't move into the house because the deal's not going to close, the finance is not going to come through. There's actually a lot of avoidance of pain or fear that's involved in making the decisions around this stuff. So we're going to talk about both. We're going to talk about solving for both pain and pleasure. And here are the 8 things that we've seen as opportunities really on the real estate side and on the mortgage side, where we can either alleviate some of that fear or alleviate some of the pain or the worry of the selling process and also add to the pleasure of it. Talk about pre-commitments, which is our solution here at Princeton, and what you're seeing a lot of companies going towards. It's even a step up beyond the pre-approval process. Working with the sellers, choosing the right lender, different financing options and how those can play into your offer getting accepted or not. How you can shorten contingencies or clean up your offer, as I like to say. How you can offer cash and what we can do as a lender. That's really interesting. I think maybe not everybody knows this. coming in with your best offer the first time and what exactly that means, and then how to negotiate wisely, right? And so we're going to talk about those 8 things. I think there's opportunity in all of those different areas. Again, if you have questions as we're going through, put them in the chat, unmute yourself, raise your hand. We'd love to hear from you. All right, so here's the one that I think is the most important and most often overlooked, right? We all know, or we've heard, most of us have probably heard in the past, that you don't want a pre-qualification, you want a pre-approval, right? What does a pre-approval mean versus a pre-qualification means, hey, the borrower told me X, based on what the client told me, this is what they qualify for. On the pre-approval side, it's borrower sent in documents. Those documents, I see these documents, we have some documents, I'm saying this borrower is pre-approved, right? But most of you guys know that when you're writing a contract, there's a commitment date usually that's involved in the contingencies on this, or a date in which the loan, if there's a loan involved, has to be approved by the lender with conditions and provided saying the lender intends to lend on this property as a commitment, right? Well, you can't offer a commitment prior to there being a property because we usually need a property address, right? We need to know a property, know the value of that asset in order to offer a commitment. But what we can do on the lending side and what we're doing here at Princeton right now is a pre-commitment. So what does that mean? That means we're submitting income documents, reviewing assets, and potentially getting appraisal waivers, which we'll talk about later, which will, if we have a certain property, that will allow us to say this loan has actually already seen an underwriter. And these are the conditions that need to be met for lending. So in other words, obviously, the best thing you can do for an offer is cash. But if I'm going in with an offer that says the lender's already seen this, the underwriter has already reviewed it, they've signed off on this income, this person qualifies pending the property being chosen, and I can go in with that offer, that's going to make my offer more likely to be accepted. Why? Because it makes the odds are slim to none without some sort of event happening in that borrower's life that they're not going to end up qualifying, right? So what we offer here at Princeton, and I have seen some other companies doing this as well, but something here within 24 hours of your borrower sending in their documentation to potential client, we will have that loan pre-commitment done by our underwriting team, reviewing that income so that you know exactly what income we're going to be able to use on that loan, and you can make that a stronger offer to the seller. Again, eliminating the fear of what? Right? You've probably all, if you've been doing this long enough, you've all had a deal that got blown up at the end because something got screwed up in underwriting or something wasn't reviewed up front. We're eliminating all of that worry up front. So this offer can really be as strong as cash, right? The only thing that would change, listen, if somebody lost their job during the process, those things can still come up, but short of an event like that, this offer becomes as good as cash, right? So we're maximizing the confidence and certainty of the seller. And by another thing is we'll also decrease our time to close, right? Because we've already reviewed the income and we've already gotten that commitment, we're already through that first stage of underwriting. So by the time that appraisal comes back, if we need an appraisal, or by the time we need that commitment date, we're going to be ready to close, right? This can shorten your non-appraisal portion of the mortgage process to a couple of weeks or less. Any questions about any of that or how that pre-commitment process works? Is that Hillary? Yeah, go ahead.
Yeah, sorry, you said that you can usually do that only like within a day?
24 hours, right? So if your borrower submits all of their documents to us, we will have one of our underwriters review that file within 24 hours. And then you can go out to use that pre-commitment to make offers on a bunch of different properties, or we can give specific amounts for each one so that you can say up to this amount for this house. We can give you a special pre-commitment for each offer you make, or you can use one generic one for multiple offers. Cool. Yeah. Again, the whole idea of this is to create another convenient way for you to strengthen your offer on the real estate side, and hopefully that your offer will stand out in a 5, 10, or 20 offer situation. So here's another thing that, again, one of the things that you'll hear me talk about often, or the guys who see my presentations or my trainings here on the mortgage side, we forget how much the people matter. Right? As realtors, your reputation in your community and your relationship with other realtors in your community matters. Right? I see it all the time. People will be like, oh, I'll know a realtor in the area who has a certain reputation in my area or in the area that I used to live in. And I see them right now complaining that their offers aren't being submitted or aren't being accepted. The reality is there's a human element to this, right? Realtors have a tremendous amount of influence over their sellers. If they know someone is trustworthy and can be easy to work with, they're going to be more willing to work with that person. So you can make the difference. So how many of you guys as realtors, how many of you guys are calling somebody before you, calling the seller's realtor before you submit an offer? Anybody here, like, I don't do that. It's not for me. Why do we do that? Anybody want to take a stab and shout it out?
Just what you said, building rapport with the listing agent so that they know that you're going to be on top of it and the deal is less likely to fall through.
Absolutely, right? Here's another reason. Are you guys asking questions like, hey, are there any hot button issues with your sellers that are huge difference makers for them in this process, right? Are we doing discovery? Are we finding out? Every seller's got a different thing that's most important to them. Is it the time that they can get out of the house? Is it they need a little extra time in the thing? It's hard to know what it is. Are we doing discovery so that we can make our offer stand out? We want to work with the sellers, understand the psychology. Again, selling your home is a stressful process. As realtors or loan officers, we get lost in this sometimes because this is what we do every single day. But our sellers or our buyers, they do this, very rarely, right? It's a stressful process. They don't trust it. They don't feel like they have visibility into it, right? So we can alleviate those things by making sure that our offer specifically addresses the things that are most important to that seller, right? So we want to make sure that we're reaching out to the seller's realtor, finding out what's most important to the sellers and what their plan is. And then we want to talk about how much we love that house or how much our clients love that house, right? Why is that important? Do you think it matters? There's tons of research on this, right? And the answer is it does. The emotion of selling a house for people, even the ones who say, it's not emotional for me, I don't really care who buys this house, I'm just going with the best offer. We know the science on this says that that's not actually the case. By expressing our story and sharing our story, we actually make us more likely to be selected. I can give you an example of this personally. I made an offer on a house way back when I was living in New Jersey. And honestly, we didn't have the money. I didn't have the money at the time to make a full price offer on the house. I couldn't make the down payment. I was going in low. And when we made the offer, we personally went to look at the house and we brought cookies. So the sellers own the house. They were there. We brought cookies for them and we told them how much we loved the house and the handwritten note and story. And they literally said to us when they accepted the offer, we would not have accepted this offer from anyone else, but because we want someone to love this home as much as we did, we're going to accept your offer. And it was way under asking price that we went in at, but that was important to them in a way that we wouldn't have expected. So we know that those things can make a difference. 3, this one's really important to me, obviously, right? Choose the right lender. Who is the right lender? What are some things that are important? How many of you guys work with loan officers that reach out to the seller's agent on every offer? A couple hands, not many, right? This is a huge missed opportunity, right? If you're not working with somebody to do this. First of all, you have to work with a loan officer that you trust to represent you well and do a good job in that conversation. But the loan officer reaching out and going and digging in for those same types of probing questions. What's most important to the sellers? What's their plan? And by the way, here's how the communication process is going to work during the loan process to give you and your clients peace of mind. Those things make a huge difference. One of the things that we've really focused on with our marketing department here at Princeton is an automated process that alerts the sellers to every piece of the process as we go through. So that seller's realtor gets notified when the appraisal's ordered, when the appraisal's in, and what different parts of the loan process is, so that there's automated communication that lets everybody know what's going on in a proactive way. It brings peace of mind to the process. It alleviates that pain that sellers and sellers realtors often feel, right? Anybody here ever been the seller's realtor in a deal and they felt like they had no idea what was going on the other side and they got blindsided at the end? It happens all the time, right? Happens to us all. So you want to make sure you're working with a loan officer who's local, knows your local market, right? And we'll talk about why that's important in a second, and is going to master that communication process. Communication during the sales process alleviates that pain and brings pleasure to everybody during that process, right? So why is it important to work with somebody that's a local lender? What are some things that can go wrong if you work with somebody who doesn't know your market? Anybody want to share? Anybody have any stories? Nobody has a story they're willing to share? There's got to be somebody who just loves the attention of being on camera and wants to talk for me. Yeah, so a weird group of salespeople. Usually there's like 9 people jumping into that conversation. Well, so listen, if you work with a company that doesn't have local appraisers that know your market, especially in this rising cost market, your appraiser can blow that deal, right? Maybe, by the way, you have some weird flood zone type issues or weird things with how HOAs are in your area. If you have a lender that's done a ton of loans in that particular town or area, they're much more likely to see problems up front, and you can avoid a bunch of those problems during the process. So you want to work with local attorneys, local loan officers who know your area, know your market, and can see the problems coming up before they go wrong, right?
Mark,
And then, go ahead.
one of the things I found is that I actually had a lender who didn't know the market, and we went all the way through, and then the buyer on the other side had given them wrong information, don't ask me how, about the condo fees, had underestimated by hundreds of dollars. And because the mortgage broker was not familiar with the area, it didn't jump out at him until weeks had gone by, and he found, what she was saying was about 150 was closer to 750. And of course, she did not qualify. And that was just a perfect example of not having a local lender in there.
We see it all the time, right? And it's one of those things that, it's not a problem until it's a problem. But the reality is every market is really different. I've been hearing since I got into the mortgage industry back in 2005, that technology was the great disruptor, and that suddenly loan officers would all be in a call center far, far away, and that the street loan officer was going away and would be devalued. Every year is the death of the loan officer, the death of the realtor, I'm sure you've heard as well, right? Zillow and all these other places are going to take over everything. But here's the reality. Thankfully, our industries are super complicated. The mortgage process is incredibly complicated and nuanced depending on the area you're in. Same way it is for the home buying process. And having a local expert or somebody who's familiar with that area can be the difference oftentimes, right? And so that's a perfect example of the HOA thing. I started out in a call center a million years ago. I had some of those experiences myself. You don't know what to ask if you don't know what's common for the area. And so those things will sneak up on you. It makes a difference to work with somebody local who has that expertise. Thank you so much for sharing that, Michelle. Number 4, one of the other things that we know, and I'm sure I'm not going to, this isn't going to be news to anybody here, is that the type of loan that you're doing can make a huge difference, right? Oftentimes I've seen loan officers give a situation where sometimes an FHA loan is the best loan for somebody, but it is not the only loan that they qualify for, right? So we all know that FHA or VA, like right now, VA is a really tough thing to hear down here in Charleston and get offer accepted, because you can get a situation where the appraisal will not come in at that amount, right? It gets flagged during the process. The appraiser says you're not going to appraise, and it can halt the whole deal. So yes, you can still do a VA loan for somebody, but you can go in with a conventional offer. You can still do an FHA loan for somebody and go in with a conventional offer. And so one of the things as a loan officer that I encourage my team to do is say, okay, great. Well, if FHA for this person, because of whatever their situation is, might be the better loan, right? We're going to go with a conventional offer. We can still do an FHA loan. When we make that offer, what we're saying is this person qualifies for a conventional loan. In worst case scenario, they can go that route, but we can still do FHA financing if that's the best scenario for somebody. Same thing with VA, right? We're just saying we have this conventional option. And FHA in particular, this works well for, because on an FHA appraisal, I can use an FHA appraisal and use it on a conventional loan. So we have that optionality, right? Just because you go in with a conventional offer doesn't mean you have to close with a conventional loan. It means that you can't say I'm not going to close if I no longer get this FHA loan. If for some reason you didn't qualify for FHA, you would have to close with a conventional loan. Does what I just said make sense? No, it's a little nuanced. I'm trying to make it make sense. So again, a stronger offer is, okay, great, we can do an FHA loan, but if I can find a way to get you qualified for conventional, even if that conventional loan doesn't make sense compared to the FHA loan, but it makes my offer more likely to be accepted, I should be going with a conventional loan on the offer sheet, right? So a very small thing that I think gets missed all the time that can make a big difference. And VA loans, same thing, right? Particularly if you're working with a lender that has 24-hour turn times and you're not closing for 4, 5, 6 weeks, go the VA route, try to get a VA appraisal. If it doesn't appraise VA, you can always go get a conventional appraisal and close on that conventional loan if you think that VA loan is a better option. right? I actually see some of my loan officers looking at me like, I hadn't thought of that before. So we got to maybe talk about this more in our own trainings as well. Or maybe I'm just reading into their loans. Cleaning up your offer, shortening contingencies, right? So again, obviously, I think this is something we probably all run into in this industry before. You come back with contingencies. They're scary, right? We have inspection contingencies, appraisal waiver, appraisal contingencies, all sorts of different stuff. You know, one of our loan officers does this all the time. I've learned a lot by watching that loan officer. When you're making an offer, especially if you have a borrower who's planning to put 20% down, we can submit our pre-commitment with or having already run that property through our automated underwriting system and potentially submit our pre-commitment with an appraisal waiver, right? So one of the real anxieties right now is my house going to appraise in this market? It was worth $300,000 6 months ago. Now it's worth $350,000. Is the appraiser going to find comps that have sold recently? How does all that work? We can get in many different markets. If the house is sold already within the last 10 years, and sometimes even if it hasn't, we can get an appraisal waiver. So you can literally waive the appraisal as a contingency in the initial pre-commitment. So in other words, if you have a pre-commitment and we've already waived the appraisal, we're saying we're good on income, we're good on assets, we're good on the property, right? And we're good on credit. Now, those are the only 4 things we evaluate in the mortgage process are income, assets, equity, and credit. So if we've already got all of those covered, this is as good as a cash offer, right? And that's a conversation that your loan officer can call that seller's realtor and explain and say, we're good on the appraisal, we're good on the income, we're good on the assets. This is as good as cash, right? And so that's another way that you can get there. Other contingencies, obviously, there are other contingencies, obviously, that you can waive, but this is specific to the lending one here is give your loan officer a chance. And by the way, this is something that takes 10 minutes once they have your application to run the property through our automated underwriting system and see if you get that appraisal waiver. In many markets, you're going to get it on most of the houses if your client's putting 20% down. Awesome. And by the way, here's another thing too, in a very competitive market right now where you have 20 offers going on a property, this is another one of those things that you can say is like, okay, let's say your client could put 20% down, but maybe they don't want to, right? You could still waive the appraisal contingency, still get an appraisal done. And if it does appraise, great. You put down 5%, you put down 10%, that's fine. What we're saying is if it doesn't appraise, I have an appraisal waiver and I can get that done, right? So if you want to go that route with it. Again, there's a lot of options, but if you're putting that 20% down, you can go those routes. Questions about contingencies or the appraisal process? Cool.
Sorry, just a quick question. For the appraisal waiver, how is it like kind of like certain price range? Because I mean, I see that with like kind of typical market, I guess just like with right now things being so bananas that, I mean, I've seen offers where you'd like, you've had to call the buyer's agent to make sure it wasn't a typo because they're going so far over now. You know, it's one thing if like, you know, maybe it's $20,000, I can see that, but like, you know, there's definitely deals now where it's like, if you're not going 50 grand over the asking price, like don't even bother. Like that's kind of a.
Yeah, so it's so interesting you say that. So this is anecdotal, right? I don't have a ton of data on this, but I'll just say from my own personal situation. So I live in a market down here in Charleston, South Carolina, where I bought a house for $552, like 3 years ago when I moved down here. I recently did a refinance. This is before everything went super crazy, but at the end of, end of last year. And when I had an appraisal waiver all the way up to 709. Right. So I bought the house 3 years later, 552, but whatever the algorithm was that Fannie and Freddie had for my property had me getting an appraisal waiver all the way up to $709,000. So it depends on your market. It depends on how typical it is, but I have seen a lot of leeway. By the way, one of the things your loan officer can do is your loan officer might say at 700,000, you have an appraisal waiver, and at 705, you don't. And by the way, those are things that you can know in terms of what offer that you want to make or not make. Does it make more sense to offer 705 but have an appraisal, or 700 and waive the appraisal and say that we don't have the appraisal contingency, right? You know, our houses in your area are appraising or not? How is the seller or the seller's realtor worried about the appraisal hitting, or are they not, right? And so there's some optionality. Those are things you want to build a relationship with your individual loan officer on and be able to have the conversations about your local market of the moment to make sure that you're making the best offer. But I think that's a really good point. But I have seen anecdotally some ones that I would not have expected to get a waiver on that we still got it on. So there's something to keep in mind.
Mark,
Hey, Mark.
we have another question from Jackie. How will the appraisal contingent waiver affect the buyer in the future?
I no effects whatsoever. The loan goes through and the registration and the algorithm from Fannie and Freddie will always go off of what the original appraisal was, but then they're using an algorithm for how much home prices have gone up. Sometimes in the mini zip code, right? Like it's not even just the whole zip code, like individual markets or areas, how much home prices have gone up. So in other words, like when your neighbor sells their house and the appraisal on that house gets registered or the sale price of that house gets registered, then that will affect the algorithm for how they're valuing the surrounding houses in the neighborhood, whether it's by square foot or by the market, different things that go up and down. So it's not an exact science.
Okay, this is Jackie. That makes sense because I'm in the Pittsburgh market and I have been seeing that. I was just concerned, as my buyer and also to protect myself as an agent, because if someone's like, yeah, let me waive it, but then down the road, I don't want to be liable if they come back. I mean, we can't predict what's going to happen, but that's good to know how those algorithms work. I wasn't aware of that, but thank you.
Yeah, no, it's that algorithm is updated every time there's a sale price in that zip code. And they take the square footage and the different bedrooms and bathrooms and plug all of that in to predict what the home values are for those waivers on the other properties. So, and again, like I said, I've seen some waivers that necessarily we thought were a little silly at the time. Let's put it that way. So, I think there's room I think it's something to explore on every deal if somebody's able to put 20% down. Any other questions? Awesome, guys. Thank you. So one thing I'm sure that you guys are all, you guys can still see my screen, right? Cool. One of the things that I think everyone knows is that the best offer is a cash offer, right? Best offer is a cash offer. Here's another thing that I think, I just experienced this personally. One of my loan officers had a client that put in for a cash offer. They had the cash or the access to the cash to make a cash offer. Then they did it, but they also had some not so great credit. So they went with an FHA option. They show up at the closing with the FHA loan and the seller sees that they're getting the FHA loan. The seller was like, oh, I went with this offer because it was cash. I had an offer that was $9,000 higher from somebody else on an FHA loan. And I chose your offer because it was cash. I'm not selling the house anymore. They tried to be like, they couldn't do this, but they were like, they threw kind of a temper tantrum over it because they're like, I lost $9,000 to get a cash offer. Now you're getting an FHA loan. That's not what a cash offer means. When you go with a cash offer, what you're saying is, if I can't get financing, I'm still buying this house and I'm buying it with cash. It doesn't mean you can't use a loan to buy. Where that money comes from at the closing table is irrelevant to the seller, right? So somebody in this case was able to get a house that had $9,000 of a lower offer because they said, hey, listen, if my FHA deal falls through, I'll pay cash for it, right? They were able to get the house for $9,000 less. My point in bringing this up is one of the things that I think a lot of loan officers probably don't think to ask, right? Or even realtors don't think to ask is like, hey, listen, it's not a good idea to buy a house for cash right now. If you can borrow money at 3% tax deductible, you're better off taking that cash and investing it almost anywhere else and borrowing as much as you can. Right now, I have millionaire clients who own their house free and clear, taking huge amounts of cash out of their homes and putting it into the market because they can borrow it at 3% and make 8%, right? So putting a lot of cash out for a cash offer doesn't make a lot of sense. But if you can make a cash offer, right, you don't even have to do delayed financing, which I see some people doing. You can literally just come to closing with a loan and just say, what you're saying is, I'm not relying on this loan to get this deal done. So it's another way that you can make your offer more attractive. And by the way, if the reason you wanted to offer cash in this place because you wanted to say we can close in very quickly. Again, I think we're closing loans here in sometimes 2.5 weeks pretty easily if we have everything in line. But if you wanted to close cash, there are delayed financing options. So your borrowers can close in cash and then get a loan, right? In the weeks and months following that closing, as if it was a purchase loan at purchase rates. Any questions about cash offers?
Mark, we have a question from Albert. Hi, Mark, you said I can make an offer and say that it is a cash offer. Will they ask for a proof of funds? And just kind of what that process looks like, if you could explain.
Yeah, I mean, I would. I would certainly ask for proof of funds, but I don't know. There may I don't know what the laws are in each individual area, but certainly I would want to see proof of funds for that. So, but again, I mean, it can literally be, you could say make a cash offer as a gift, right? You could have a gift cash offer and get proof of funds and still then get financing and not use that cash offer. But what you're saying is I'm on the hook to buy this house if for any reason my loan falls through, regardless of the loan, right? The loan is no longer a contingency in that case. Any other questions? Awesome, guys. And thank you so much for the questions. Here's another piece of advice, right? Prepare your clients to make their best offer up front, right? If the house went on the market today at 3 o'clock and you know that the houses in this price range are getting 10 or 15 or 20 offers right now in your area, prepare your clients for the psychology of this. Losing offers on a house that they want to get is painful. The difference in $10,000 of borrowed money right now, does anybody have any guesses? Everybody type in a little guess right now in the chat if you don't mind playing a game with me. What is the monthly payment difference if you borrow $200,000 versus $210,000? What is just the difference in the monthly payment for borrowing an extra $10,000? My realtor friends. Any guesses coming in? Let me see the chat. Isabel, you got any guesses yet?
Yeah,
Shot
15,
$15. What else? Any other guesses?
25.
Slightly more than that, right? It's about $45 right now, where interest rates where they are, $40 to $50 per $10,000 that someone's borrowing, right? It's a relatively small difference. So if your buyers are looking at a house and you're like, that's the house, I want that one, right? Like you're short, feels good, you have a full body yes. Don't mince over $5,000 or $10,000 in terms of the offer price, especially if you're planning on living in that home for a long time. If you're buying the house for 2 years, you're worried about selling it again, okay, fine, we can make those financial decisions at that time. But if you're like, this is my house, I'm going to live here for 10 years, that's the one I want, $10,000 difference can be as little as $500 difference in down payment and as little difference as $40 to $45 in monthly payments for making that extra offer. So those are conversations you want to make sure that you or your loan officer are having with your clients going in, and just making sure that this is not the kind of market where, as a realtor, your job is to do the best job for your client, right? In a normal market, a lot of times that is making sure your client's getting the best deal for the house they're getting. In this market, it's making sure that if your client is a full body yes for a house, that they're getting that house. Have that conversation up front. Let them know what the difference is between going in at 240 and 250 or 250 and 260 for that difference. Questions about that? All right, guys. Here's the last part of this. And again, one of my favorite books is Never Split the Difference by Chris Voss. Chris Voss is an FBI hostage negotiator, and he takes you through real life FBI hostage negotiations and how they went and what he learned from them that you can use in any negotiation that you're going through. It's awesome. I firmly recommend that you read it and then probably read it again. It's also a good listen on Audible. It's great. Not all of it applies directly to the real estate transaction, as this is kind of there's a distance in the negotiation of those things. It's not like you're not negotiating, the price of a ticket fare for, I was in Cancun recently, or Mexico, and we were like negotiating the ticket prices for our family on how much we should pay for the tickets to get on this ferry ride to wherever we were going. That was like a real negotiation. I got to use all my skills from the book in that negotiation. And the real estate side is a little bit different, but some of the things that absolutely still matter are the people involved, right? People want to do business with people they know, like, and trust. If you're a stranger and you act like a stranger, or you're somebody who's off-putting, they're going to be less likely to work with you. We think that they're going to make the logical decision. People make illogical decisions based on their feelings every day. Most of our decisions actually are based on the way we feel and not our logic, even though we think that's not the case. So part of the negotiation process is making your offer more attractive. And that literally can be include the font that you write the letter on, where you're sending that of how much you like the house. right? I've seen people that I know got jobs because they made their resumes physically pretty, right? This stuff matters. We know that it matters, right? You're hiring somebody, so it's a huge decision. You're paying them X amount of dollars. What their resume looks like, the actual prettiness of it should not make a difference, but we know that it does, right? So establishing rapport, master active listening. If you're calling the other realtor, the seller's realtor, to introduce yourself, you should be doing 10 to 15% of the talking. They should be doing 85 to 90% of the talking. You should be asking probing questions about what the sellers are looking for and making sure that you deliver on that in your individual offer. You should have your loan officer doing the same thing when they reach out, looking for clues as to how you can make your offer stand out. People will often tell you what's most important to them, and then you just need to deliver on that. I think when I talk to realtors, the biggest thing they underestimate is their own value in terms of their personality and the impact they can have on the process beyond just the numbers and the facts and the negotiation. I'll say it again, people do business with people they know, like, and trust. Be the difference. Show empathy, right? When you call up, say, oh, listen, I know how stressful it is. You're probably dealing with 10 or 15 offers right now. That little connection attempt right now where you're empathizing with their situation, even if really in the back of your mind, you're saying to yourself, I'd love to have another listing where I have 10 to 15 offers. By you empathizing in that situation with the stress of it, you're building a relationship. There's a give and take, right? So I firmly recommend, if you're negotiating for a living, which is what you guys do every day, I would firmly recommend getting a copy of that book, right? And I think it's an amazing lessons in there. So that is the entirety of our presentation. To summarize on this stuff, be creative with your offer, reach out to the seller's realtor, do some research on what's most important to them, cater the offer to them, be creative, try to offer conventional on your offer letter. See if you have an opportunity to offer cash. Know the difference between, in your mortgage payments is pretty small, between $250 and $260, or that $10,000 difference being about $45 a month. And again, don't underestimate the difference it can make, right? Having your buyers write a letter, complimenting them on the house. It's about pain or pleasure. What are the things that you can do to solve for the seller that touch on pain or pleasure? We'll open it up now to any other questions or comments on anything that I covered or didn't cover. If you want to know what products I use to make my hair look like this, anything at all that I can answer for you guys that you might find interesting.
Mark, we have a question from Suzanne in the chat. Can an FHA loan be underwritten up front, or is this only for conventional?
It's a great question. Absolutely. Every lender has their own guidelines for this stuff, but here at Princeton, we will absolutely do a pre-commitment on FHA loans. There is no appraisal waiver for FHA loans on a purchase, but we can absolutely evaluate income and assets and do a pre-commitment for that. What other questions do you have? Any questions about who your favorite football team might draft tonight? I know more about that than I do about any of this real estate stuff. Anyway.
Hillary had a question. She said USDA success. I don't know if Hillary, if you want to elaborate on that at all.
I only had one client that was USDA, but and I really didn't know much about it until I got them. So have you had, I mean, obviously it's hard to locate properties for them just because very few markets can be USDA. I just didn't know if you've had any difference with them or success or the way you structure your approvals or.
So I'll be super honest with you. We do USDA loans here. It probably represents 1% of our total business. I'm probably not the best person to answer that question, but I will do some research for you and get back to you individually on that.
All right, we have another question from Heather. Do you think a VA loan even has a chance in this market?
You know, I mean, we certainly have some in process that are going through, you know, and so the answer is yes. I mean, I think it depends on the offer, the house in your market, but I certainly wouldn't lose hope. I would say that in my experience, most VA borrowers, if they can put even a very small amount of money down, 3 or 3.5%, will usually qualify for other products as well. And so again, I think you could you wanted to try to get a VA offer accepted and you thought in your market that wasn't going to happen, you could go in with an offer for one of those other properties and then still try to obtain the VA financing and give it a chance. But yeah, I mean, listen, I think a lot of it depends on the individual VA appraiser, right? And by the way, keep in mind, all these appraisers for the VA are specific VA appraisers. They're veterans themselves. A lot of them have a lot of compassion for the veterans that they're doing these loans for. They usually do try to find a way, in my experience. Not always, but usually. And so, yeah, I think they do have a chance. However, in a multiple offer situation, I think you're at a disadvantage for sure.
Thank you.
Yeah.
I said
Aaron?
thank you.
Oh, you're welcome.
I see Aaron has a question. Aaron, if you want to go ahead.
Yeah, I just wanted to comment on what you were talking about, Mark, earlier, and what the person just asked about the VA loan. I had an offer a little bit ago, and it had to be an FHA loan, and the house was actually back on the market because the last buyer, their financing fell through. The loan officer, who's actually on this call, Jennifer Burnett, called, and she told them that they were they were solid. They were solid buyers, but they had to go FHA. And we actually won the offer because of that. There were 8 other offers. So I think a VA loan, you know, would still work. Have the loan officer call and let them know that, you know, it is solid, if it is solid. So yeah, it worked for me.
Yeah, I mean, it's a couple different things. One is Jennifer's got some juice, right? She's one of the top loan officers in Pittsburgh, and so you know that's why I say, you know, work with somebody local who's got a great reputation. I'm not surprised that she was able to call and get that offer accepted. The other thing is there's really nothing wrong with an FHA offer, right? You can be a super solid FHA borrower. The bigger concern with FHA is normally around the appraisal, right? So if you have a new construction house that you know meets FHA standards or something that's in really good condition, there's really not a lot of difference as a seller between FHA and conventional, right? Where it gets a little bit trickier is with you have some paint chipping or some railing issues, different things. There are different appraisal issues that can pop up through FHA that can make that process harder. But if the house is in really good shape, if you're a seller, I wouldn't shy away from accepting an FHA offer at all. So.
Hey,
Thanks
if
for
I
sharing,
could
Aaron.
chime in, Aaron, thank you for that. And I'd show my face, but I'm horrifically sick due to my second COVID shot. I'm barely alive at this moment. But I just got another FHA offer, not FHA, a VA offer accepted actually. And I can't stress enough, Mark already said this, but you have to, as a loan officer, as a real estate agent, you have to call that listing agent and explain to them the why behind the financing. So I called an agent the other day and I said, look, they can go conventional, but the reality is it's not financially advantageous for them to go conventional. It's more financially beneficial for them to go to the and that offer got accepted. And then I had another FHA offer get accepted, and it was the same conversation. And you know, it was all of us kind of working together and just laying our cards on the table and making sure everybody knows. You know, sometimes when an agent gets an FHA offer or VA offer, they assume, you know, oh, they must have credit challenges. Oh, they're not thinking, well, gee, maybe this person could go conventional, but it's not financially advantageous for them. So why am I going to penalize them? So just make sure, you know, you guys are calling. It goes a long way. I do it on every offer.
Great point, Jennifer. Thank you so much for sharing. I feel better. I'm getting my second shot in the next day or two too. So,
Oh, good luck. Good.
Yeah, I'm excited about that now.
Oh.
Any other questions we have from anybody else here?
Yes, Mark, we have another one from Hillary. What about FHA offers for a house that's as is?
Nick,
and
sorry, I missed you,
buyer-
bud. What's going on?
We got to mute John. Hold on. There we go. Go ahead.
What about FHA offers for a house that's as is and buyer needing to get the CO?
Yeah, I think it depends on the individual situation, but I would say you want to know a whole lot about the as is, right? And so again, and this is one of those things, but one of the most underutilized tools in the real estate industry is this brand new thing called Google. And if you look up the actual FHA appraisal stuff that goes into it in terms of like what the differences are, it breaks it down for you. There's a million different resources and it's not overly complicated. The snags are pretty obvious. So my sense is if someone's coming out as is, I would certainly be concerned enough to really get a bunch of details on what that means. And by the way, if I'm a selling realtor and I'm going out as is, I want to know, is my as is going to affect FHA? In other words, is FHA just a no-go on this property? As a seller's realtor, I'd want to know that going in as well. But it really is case by case. So in general, FHA is stricter on the appraisals, but there are things that, you know, would make somebody list as is that would not impact an appraisal.
I want to tell you two things about FHA. One is that young borrowers often don't have higher credit scores just from lack of credit history, which makes them better FHA borrowers, even though they have perfect credit. So the other thing is that as people are trying to bring cash above appraised value, there are times that I'll tell somebody when I call the realtor, the selling realtor, that this person is doing an FHA loan because they want to be able to have cash to bring to the table if the property doesn't appraise. So when you make that phone call to the selling realtor, you can position your client properly. And I've actually created a new category, which I call a high-end government borrower. And I really think that it's a very valid category because there's a big span of government borrowers and there's a lot of really, really good government borrowers. And it's our job to represent them.
Thank you, Nikki. Appreciate it. Any other questions for anyone else? All right. Well, guys, I hope you found this valuable. Certainly, if you guys have any feedback, I'd love to hear from you about how we can make these better in the future. I know you guys are super busy and it's the end of the month and just super appreciate that you guys would spend some time with us today. Hope you got value out of it. And if there are any topics in the future that you're super interested in or something that comes up, you guys can reach out on social media, Facebook, LinkedIn, or through the email and respond to any of the emails that you get from us to let us know what you think or what you'd like to see next. Thank you all for coming so much. Happy selling, everybody.
Guys.
Thanks, Mark.